Hello? Hello? Anybody home? Yeah, hi. I want to talk to you today about personal loans without income proof. How do you get a massive loan amount the first time you apply? Don't go anywhere. You're going to love today's conversation, I guarantee it. Welcome back, folks, to another edition of the Awesome Sorty Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about a personal loan without income proof. How do you get a massive amount the first time you apply? Number one, first step, have property. Make sure you have property and an overall positive net worth. This is important. So personal property is essentially any property except for real estate. The main thing that separates personal property from real estate is that you can move personal property, which you cannot do with land or buildings, which are permanent fixtures, right, folks? So personal property includes everything from jewelry to clothing to home furnishings and nearly everything else you own. And it also knows as, basically illegally, it's known as chattel or movable property. So for a business, personal property might include office machinery and furniture, such as computers, desks, company vehicles, and other property and equipment used in the course of doing business. So there are three types of personal property. You have tangible, intangible, and listed. So tangible personal property includes physical objects such as vehicles, furniture, and household goods, while intangible personal property includes things like stocks and bonds, as well as intellectual property such as patents and copyrights. Did you get that? Very important. And listed personal property is property that can be used for either business or personal purposes, such as vehicle or computer that you can use for work-related matters as well as for personal matters. And one other thing that distinguishes personal property from real estate is that personal property involves riskier collateral. If you owe a creditor and you don't pay, the creditor can seize your home to get the money owed to him or her. But if the creditor tries to place a lien on personal property, it's easier for you to take the property with you or dispose of it before he or she can claim it for payment of the debt. So this is really good. So now, big decision time. Talk to me right now. Do you have personal property? So everything that you own, aside from real estate, do you have a vehicle? Do you have jewelry? Do you have clothing? Talk to me about that. Do you have some cash in your bank accounts, in your savings accounts, in your checking accounts? Those could constitute assets. Okay. So on a piece of paper, this is your homework right now. Homework on a piece of paper. I want you to draw two columns. You want to write down in one column all of your assets, and in the other columns, you want to put down all of your debts, and you want to subtract your debts from your assets. So what net result do you have? Hello, talk to me. Do you have a positive number? That's wonderful. You have what's called positive net worth, and you can continue to step number two. Now, let me tell you something. If you have a negative number here, that means that you are in financial straits, my friend. Sorry, pal, but you cannot get a no income proof loan at this time. You need property. So bottom line is step number one, have property and an overall positive net worth. Write this down. Are you done? Okay, let's move on. Step number two, you need to have a high FICO. Your score must be high. If you want to get a no income loan, you better have a high FICO, because you have to understand you represent a higher risk for the lender. Okay, make sure that you have at least 675 in both your FICO and Vantage score. Do you have a 635 minimum score? If not, you want to take these 5 steps I'm going to give you right now to raise your credit. It's important, okay? And you may have heard this time and again, but you didn't act upon the advice before. That's why your score is still low. So this time you want to do it for real. I want you to do it for real, okay? You need to raise this FICO score once and for all. Start doing it now. This is not a game anymore. This is for real. The first thing you need to do is you want to always pay on time. I mean, always. Don't give me no excuses, no if, buts, or whatever. No. Make your payments, okay? And we're talking about minimum payments. If you can pay the full balance, that's better. If you can pay something in between, that's better. But make sure that you always make the minimum payments, okay? And we have covered this on another show where you can have a system in place where you pay multiple times during the month. That's pretty good because a lot of people just wait for the 28th or the 30th of the month and just make one single payment. No. Why don't you just split the payments into 4 or 5 and send money to the credit card issuer multiple times in the month? That's really great. So number 1, always pay on time. Number 2, you want to optimize your credit utilization ratio. Make sure you have enough money to lower your COR, okay? Credit utilization is another key piece of your credit score puzzle. So this is actually the metric that measures the balances you owe on your credit cards relative to your card's credit limits. And this is calculated on an overall basis, but also on an individual basis, okay? So you want to try one of those techniques to improve your COR. You want to pay more than the monthly minimum to decrease your credit card balances. Leave cards open after paying them off. Never close an old card unless they're charging you an annual fee, okay? Because by doing that, you will reduce your overall balance owed, but maintain the total limits, thereby lowering your credit utilization ratio. And you want to request, when necessary, a credit limit increase on one or more of your cards. You want to regularly monitor your credit scores for inaccuracies. If you see any problem, you want to report it. You want to contact a TransUnion, Equifax, or Experian to fix the problem. And you want to be strategic about taking on new debt and closing accounts, okay? And you want to consider your credit mix. You want to vary things a little bit around. You want to have a little bit of a credit card, a little bit of loans, a little bit of revolving lines of credit. Just mix things around, okay? So bottom line, step number 2, you want to raise your FICO score or Vantage score to at least 675. Write this down. Are you done? Talk to me. Talk to me. All right, let's move on. Step number 3, you need to have a story. If you're trying to get a no-income loan and you want to get approved for a large one, you better have a story. You need to explain to a lender the source of your money, the source of your wealth. For example, if you don't have a 9-to-5, where are you deriving your money from? Talk to me about that. Therefore, you need a story. No fairy tale though. No fairy tale. We're not here. This is no Disneyland. No. You need to be very, very truthful here. For KYC and AML compliance reasons, the lender is obligated to know a bit about you, what you do, how you make money, what type of business you're involved in. Unless you have inherited some massive cash from your late uncle Cash Money Mullah Sr., you must be bringing in revenue from somewhere. And I want you to explain that. Talk to me about that. So tell me right now, what is your money coming from? I'll admit it, I am nosy, but so is the lender. The lender is nosy too. By the way, when we talk about KYC means know your customer. And AML means anti-money laundering. So those two are quintessential parts of a legal framework that the US government has put in place to fight money laundering, okay? So let me ask you point blank, for real, how do you make your money? How do you make your money? Do you have a resume? Don't laugh, I'm serious here. To get a no-income loan, you might need to tell a lender about your life journey. So resume, check. Do you have 3 years of tax returns? Awesome, check. Do you have bank statements for the last 3 months? Well, check. Do you have other ancillary paperwork like brokerage account statements, lottery win checks, casino gains, or maybe property sale records and title transfers, right? Anything that can justify the money you have at the moment, you need to have it ready when talking to a lender. Even a letter of a distribution of estate assets that your hypothetical Uncle Cash Money Mullah Sr. has left, you need to show that as well. So otherwise, the lender might start thinking that you are, say, a mule. Did you hear that? A mule. And you don't want that because the FBI says don't be a mule. You know what that means, right? If you don't, go watch that article go read that article on the FBI website. Okay, by the way, a letter of distribution of a state asset is a formal notification prepared by the executor. So this basically is sent out to the deceased heirs to inform them about the money and valuable items they are entitled to after the passing of the owner. So Bottom line here is what? Step number 3, be ready to explain your background as well as the source and extent of your wealth. Write this down. Finished? Talk to me, talk to me, talk to me. All right, let's move on. Step number 4, you need to understand. So when we talk about no income loans, you need to familiarize yourself with no income loans in general, okay? So what is it? A no income loan is a loan provided by lenders to a consumer who does not have a traditional source of income, such as a job. So it's important to learn about no income loans because you might not always have income paid from an employer, okay? And so here, when we talk about no income loans, you are talking about loans that are designed for someone with income that does not come from a regular day job, a 9 to 5. And these loans generally require you to have enough liquid assets or alternative income sources to repay the loan. So when we talk about liquid assets, we're talking about money, monetary assets. You know, you have cash at the bank, or you have cash at home, or you have stocks, bonds, you have property that generates revenue, okay? And the lender is actually obligated to verify these sources. I said it before, this is important for KYC and AML purposes, among other things. And there are alternate names for these loans. You might hear something like alternate income loans, alternative income verification loan, no doc loan, bank statement loan, no income verification mortgage. All those terms are interchangeable. They mean the same thing within a few exceptions, okay? Money, money, money. Talk to me about money. How no income loans work. Now, these loans work similarly to other types of loans. However, no income loans require that you have some alternative method of paying them back with interest. So lenders are interested in your credit history. That's what I said before. You better have a 675 at least FICO score. They want to see your bank accounts and proof of any liquid assets that demonstrate your ability to repay the loan. So when you really think about it, folks, the lender doesn't give a about your job. They don't give a about your ability to, about your job or your situation in general. They give a about your ability to repay them. That's what they care about. They want to make sure that you can pay them back. That's all that matters to them, okay? So the more financial stability you demonstrate to a lender, the more likely you are to get the loan application approved. So a lender will peruse your finances, your assets, your credit score, your distributions, or payouts from any other sources to determine the level of risk you represent to their firm if they were to approve your loan. If they are confident that you can repay them with no problem, they will likely approve your request. So this is important. Bottom line here, step number 4, you need to understand the ins and outs of no income loans. Write this down. Done? Okay, let's move on. Well, before we move on, I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sorty Kiwi Show. In today's conversation, I'm still talking to you about personal loans without income proof, how to get one large loan amount the first time you apply. Step number 5, you need to know the loan typology here. You need to know the types of no income loans, okay? So if you need a loan and you have no other option but a no income loan, it's important to understand the available types. So there are 4 types of no income loans in use. You have a stated income, verified asset, a SIVA. You have no income, no job, no assets, a NINJA. No income, verified assets, a NIVA. And no income, no assets, a NINA. So a SIVA loan can be approved for someone who has income, although not enough for a loan, but enough verified assets to put up as collateral for a lender to feel comfortable lending money to them, right? I was talking to you earlier about you need to have property. If you want a no income loan, you better have property. You better have a high FICO score, and a SIVA will help you. And NINJA loans used to be commonplace before the financial crash of 2008. They were essentially loans made trusting the requester's word that they could be paid off over time. However, lending regulations have made them much harder to obtain, but they're still there though. They're still there. And of the four types, the NIVA loan or the NIVA loan is generally available to consumers without traditional or alternative incomes. So the NIVA loan is what? No income, verified assets. So it requires that assets be appraised for value and then placed as collateral before a loan is approved. Okay. Well, again, when I mention the term assets, I'm speaking about property. Okay. And NINA loans are generally reserved for real estate investors who have rental income. So these investors must demonstrate they have enough to make payments for a loan approval. So this is really important. Okay. So what is really proof of income? So when we talk about proof of income here, and of course for these loans you don't need proof of income, but in general, when you hear the term proof of income in any loan, any traditional loan process, we are talking about pay stubs, W-2 tax forms, payroll verification, and tax returns. But if you're applying for a no income loan, you generally don't have pay stubs. You don't have a W-2 tax forms. You don't have payroll verification. You might have a tax return because at the end of the day, you need to still pay your fair share of taxes. So you might have your 1040 or your 1065 or your 1120 or 1120C or 1120S if you have a business on the side. Okay, but that's what it is. So bottom line here, step number 5, you need to understand the different types of no income loans. Write this down. Are you done? Okay, let's move on. Step number 6, you need to maintain sources. Okay, you need to understand what types of income sources most lenders generally ask for. So the thing is, you have no income, okay, or you cannot prove your income. That's fine. And the thing you need to understand is that there are many different types of liquid or cash equivalent assets, monetary compensation, benefits, or alternative income sources you can use to show that you can make payments. Because at the end of the day, I've said this before, and I'm going to say it again. The lender only cares about your ability to repay, and they care about the source of that money that you are going to use to repay them, to make sure that there's nothing fishy here. Okay, so some assets might include a house or real estate. I've said that before. Appraised valuables, government bonds, a vehicle. Okay, big decision time. Talk to me right now. Do you have property? I'm sure you do, but do you have property that can be appraised to serve as collateral for the loan? Talk to me about that. Have you done that work, or do you want the lender to appraise it? Because lenders, if they have to appoint someone to appraise the property that you are going to put up as a collateral, they usually are very conservative. They will go to the low side of the property. So you probably need to enlist the help of an appraiser yourself to do the work beforehand. Okay, and some of the different types of income you can use consist of Social Security benefits, retirement or disability, dividend payments or other investment income, a job offer with an offer and an acceptance letter, a retirement account including a pension, okay, Veterans Administration benefits, VA benefits, side gigs or a business startup, self-employment income, unemployment benefits, royalty payments, partner income, child support, tip income, alimony. Okay, even if a lender thinks you are able to repay your loan, they might still think there is some risk. So as a result, you might have to pay extra to make up for the risk the lender is taking. In addition, no income loans can come in with several disadvantages, such as you might have low loan amounts, even if you have a cosigner, repayment term of months instead of years, higher interest rates, or higher fees. So those are things you need to think about. So you need to maintain sources, okay? You need to have a list. You need to have a variety of sources that you can show the lender that, hey, listen, I'm making money. I might not have a 9-to-5 job. Okay, I grant you that, but I do have money. I'm making money. So bottom line here, step number 6, you want to maintain generating assets. Okay, this can be, you need to maintain assets generating revenue rather. Okay, revenue. And what am I saying here? You need to maintain revenue generating assets. Yeah, that's what it is. You need to maintain revenue generating assets. You want you to write it down. Okay, write this down. And number 7, this is the last step here, folks. You want to plan and apply. So when we talk about boosting your chances of being approved, you need to know how to get a personal loan with no income records. Okay, you can put up collateral, So collateral can be property that you have, cars, real estate, investment products, high value goods. This is a good way of being approved. If you have high FICO score, that's even better. 675 maximum, 675 minimum, that's better. Trying to get a co-signer who has a normal 9 to 5 job or has a high FICO score as well. Okay, it's important to understand that if you really are trying to get the loan approved, you don't want to have any derogatory items on your profile, on your credit report, at least not recently. So I'm talking about late or missed loan payments, accounts sent to collections, bankruptcy filings, home foreclosures, high credit card balances. You don't want that. Obviously, those things will ding your credit score anyway. So if you have a high FICO score, you basically are not doing any of those. Okay, so make sure that you clean up your act before you apply. And you need to also understand is that if you have bad credit or too many of these negatives on your credit report, you need to improve them before you look at how to get a personal loan with no proof of income documents. Okay, and there are also some personal loan options for a self-employed borrower. Okay, so you have some sites, you have peer-to-peer lending, for example. Those are platforms that will let you fill out an application and match with an individual investor. So you get a risk rating based on your credit score, and that determines your interest rates. You can also apply with credit unions. And the thing here is that credit unions also operate within a member-owned model. So if you belong to the credit union, you can get a no-income loan and borrow from a pool of money that consists of other members' deposits. And credit unions are there to serve their members, so they tend to be more willing to work with people who have alternative income situation or are temporarily unemployed. Okay, you can also try home equity loans. So those are actually a type of second mortgage loan that may be available for those who want loans for self-employed individuals or independent contractors, but you will need very good to excellent credit. Okay, and if you go this route, expect to pay high interest rates and be careful only to take the loan if you're sure to pay it back, because if you default, you could lose your home. Very important to remember that. So bottom line here, step number 7, you want to plan your application and apply when you are ready. Write this down. All right. So folks, this is the end of today's conversation. So I was talking to you about personal loans without income proof, how to get a large one the first time you apply. Number 1, you want to have property. Number 2, you want to have a high FICO, 675 minimum. Number 3, you want to have a story. I want you to concoct a story that is plausible, that is truthful. Okay. You want to understand also the loan typology here. You need to understand also how the whole process works. Number 5, you want to know the loan types yet. Number 6, you want to maintain sources. Number 7, you want to plan and apply. Thank you so much for your attention, folks. I'll speak to you another time, but until then, remember, stay marvelous.